Hey buddy, I wanted to give you a quick video, hopefully less than 10 minutes over the strategy. You wanted my printed version of my trade plan. I've got so many pages in my trade plan and I'm trying to clean it up, but I'm going to go over this specific strategy. I just call it swing trading strategy. There's not anything magical about it. Normally we end up having just a blank screen like this and we can identify pivot high, pivot lows, and things like that. And I like if you notice, I'm focusing on the monthly, weekly, daily, 12, 8, 6, 4, and 1. I rarely ever go to 1. That's usually for other people besides me. That's a little faster thing. So I use an FXCM demo account to do my charting. I use the Owanda to do my trading. The tools that I use, you'll see them here, are the supply and demand tool that's mechanical and it's automatic. I don't have to do anything. These are set up based on my criteria of OTA stuff. I have the SRV1, which is another tool that was developed for us. It's mechanical and automatic. That's going to plot our Fibonacci numbers, not the traditional way of finding a high and dragging it down to a low, but it's going to play whatever the number is, the number is. And so that's going to be what we're going to use. You're also going to see SSI snapshots. I use that along with IG website. We'll talk about that. Again, that's a mechanical automatic type thing. That's nothing that's subjective. I don't have to guess about it. It is what it is. The whole moving average, the HMA 200, that's just for a visual guide. There's nothing that I use it for as far as determining any sort of entry or anything like that. Then I have show time to end. I use that when I get ready to do a momentum trade. I have to wait for the candle to completely close if I want to add to my position or even jump in quick. It's more of an aggressive thing. That's the only time I use the whole moving average. And then we use ATR to help us with our stops. Again, I use the monthly, weekly, daily, 12-hour, 8-hour, 6-hour, and 4-hour. Those are the ones I have on my chart, but I focus on the daily. The main pairs that I trade will be the Aussie US, Euro US, Euro Pound, from time to time the Pound Kiwi, Pound US, Kiwi US, US Yen, and occasionally I'll do the Aussie Yen. But I also look for those pairs that pay me the most. I don't want to get in those 70 cents type, so I'd rather have the full dollar. My trades can go from anywhere from 1 day all the way up to months. The average is about 10 days over the last 300 trades that I've taken. My goal is 30 to 40% annualized return. Met that the last 2 years. I'm slowly increasing that as we go along. My expected monthly gain per pips is 450 to 650 pips per month. I've been doing that as well. And what I risk is anywhere from 1% all the way to 2.5% on any one pair at one trade setup. I don't ever go more than 2.5 at this current point. One is if I just don't like it much. Normally I'm right around the 2% mark, but 1% is if I feel like I got to get in the trade, but I'm not sure which direction it's going to go, so I don't want to risk more than that. All my trades are set and forget except for those small pieces that are momentum. But I'm usually a set and forget because of my time schedule. I'm not allowed to be around the screen that often when I'm teaching class at school. So I'm very, very particular about that. So this has been a swing strategy. It's not my only strategy. It's just my swing for my long-term consistent growth. Don't want to be around the screen. As school gets out and I get in the summer months, I will get more into the day trading stuff again. But this is the swing trading stuff. The basic setup for our supply and demand tool. There's a strength indicator. I set mine for strong. Candles in the base will be 3. As a max. Sometimes I'll drop it down to 2, but mostly I just leave it alone at 3. Ways to draw my zone, you'll see the zones are going to be drawing normal proximal line, distal line. That's typical OTA type thing. Authenticity and freshness are already determined by the tool. It's already in the tool by itself. I don't have to even worry about that. So what I do as far as my trade plan, my routine is every Monday, go 1 hour to an hour and a half. I look at all 20 pairs. As you can see here, all 20 pairs that FXCM will allow me to review, and I go through the process of every pair doing the same identical thing over and over. I do not trade them all, though. I'll put areas where people could take a trade if they want to, that I think could possibly work out, but I don't trade every pair, and I don't trade just happenstance. I work and practice with about 14 pairs that I don't even trade ever. but I don't ever want to give any sort of financial advice to anybody else because they may like the pair that I don't like. You get to know certain pairs. So here's what's going to happen. I'm going to show you how my trade plan works in a video format. That way you can catch it not only in paper, but you can also watch me how I do it. I've hidden all of our tools. We're working with a naked screen pretty much. And what we do, I used to do this manually. I used to go back and find places where price always seemed to have a price reaction. My lines were never precise. It was just basically on my eyeballing. And I did this for every pair. And so I look for recent price action. You can see where price meandered here, and you can see it touched here. It became a resistance here, touched it again, fell off, broke, and back and forth. It seems to be coming back to here. So this is a place I would, even if I didn't have anything on my chart, this might be a place where I'm looking to buy a buyer somewhere because to me it shows to be an uptrend. I haven't looked at anything else though. I'm looking strictly at the daily chart. When I go back and I want to talk about curve analysis, I do it one of two ways. I'll show you the first way I keep in mind. I'm going to remove these lines. And these lines ended up basically being fib numbers, and you'll see that come into play. I like to go back to the weekly and let my tool tell me where we are. So I blow it up, and I notice we're just coming out of demand, so we're in the middle of a curve according to the weekly OTA type mentality of thinking about a curve. I'm not huge on curve. I'm aware of it. So I'm aware of it. So when I go back to my daily, another way that I do this is I'm going to go ahead and unhide these tools and explain them to you. Okay, so another thing that I do is these are Fibonacci numbers. These numbers are the same across every pair except for the yen pairs. The yen pair numbers are different. So 2.02 will always be a blue line on a daily chart for every pair. So you can start memorizing numbers. And it's funny, you'll find that these numbers, where these fib numbers have been, seem to be where price has some sort of reaction. We don't know how much reaction though, but we have reaction. We know there's price action there. So we have movement here all the way back. We can go all the way back to 2018 May and see it. And I can get tighter and tighter, and you can see that it's going to keep doing the same thing. So you'll see that these lines mean something. We don't know how much they mean. Blue means a wall. It can be hard to get through. In this case, red is resistance. It'll be a strong resistance. Green is strong demand. Notice it, today we cannot, this would have been the zone to get into, and we still could do it. This one particular is sitting on a green. When price is above the green, it's a strong area of demand, has a hard time breaking it. And again, blue is a wall. When I find zones like this, where the fresh demand is green on top of a blue, it's a no-brainer for me. If I find zones like this, it's not fresh and it's on a red line, it's still a no-brainer to me. This one I'm a little more cautious about. I want to make sure I have other things in play. So the tools that we use, we mentioned when we do tools, these are our fib numbers that are automatically placed. Okay, these are supply and demand. I don't have to think. It's all mechanical. SSI is right here. I don't have pound kiwi in here, but I do have it pulled up on the IG, and the IG is telling me that 55% of the people that are trading this are short. And that makes no sense to me considering we've been going in an uptrend. So majority of people are still short. I want to be long. Where do I want to be long? I don't want to be long up here. I'd much rather be long. We're a little late in the day to jump into this one, in my opinion. Price was down here on the green line. I would be a good shape, but it's not. It's already moved away. That doesn't mean it can't come back and retest this area down here. We'll talk about that. So we've got this, and what I like to do is we talk about curve. I also take my retracement tool and I bring it with these particular numbers down from zone to zone, from red to green. And I could also do from green to blue. But this is low in the curve for me. This area right here. This is high in the curve for me. Right now, just like we were on the weekly, we're in the middle. Now, if this would break down, I could do a very aggressive, and I mentioned in my trade plan, you'll see it here in a moment, that I use these Fibonacci numbers to basically break down where price could go back to. Looking at the previous, I'm seeing that there's possibly an entry. It's aggressive. Right here, let me get and this is what I do every Monday night. I come in here and say, okay, there's something right here. It's low in the curve. I like it. That would be my aggressive entry. And now we'll get rid of this right here and then I would say that my moderate entry would still be down in this area. and my conservative entry is down here. Okay, we know that we want to be long the pound kiwi, so that's why I put 3. Now, where would I want to be short? I want to be short up here high in the curve. Now, 95.10, where's the 95.10 going to be? It's going to be up in here, really close to this weekly supply, so it does work out. Okay, I could go even higher. I could even say this is my area right here that I'm being concerned about. That's actually fitting more in the weekly. Here's the thing with the pound kiwi that is a little concerning for me. That's why I don't trade it a whole lot, even though I'll watch it. One ATR is 192 pips. If I'm doing a zone like this, I'm half of it. And that concerns me. Okay, that's why I don't trade it a lot, because 1 ATR is usually what your zone would want to be. So I'm going to drop this down just a little bit. And this would be probably more realistic to have at least a 100 pip zone. Otherwise, you're going to get blasted out of there because it does move. And I'll probably just do that like that. So what I've done is I've identified on the daily chart specific areas. If I'm with SSI, I've got an aggressive, moderate, and conservative. If I'm anti or counter SSI, I've got my one place. If I take this one, I have to have 3 targets. My first target would be 1.5 to 1, which would put it right about here, and then 2 and or 3 actually, 1, 3, and 6 as high as it goes, with some specific rules on how to move my stop if I so choose to. Same thing with these. If I take these, its first zone is 1.5 to 1, 3, and 6. If I take this counter, my first target is a 1 to 1, second's 2 to 1, third target's 4 to 1. Okay, and I move no matter what. If this one hits, I move. If it hits target 1, I'm out of there with break even. I'm never going to go counter very long because it's counter trend if you ask me. Number 1, it's counter SSI for me most importantly, but it's counter trend. Just so you can understand how this works, also I want you to pay attention to here. I put this here and notice where our fib number and our zones line up right there. That's going to be a strong area. No matter what happens, it's going to be a strong area. We don't know how far it's going to break, but it's going to break, needless to say, just because of where it's at price-wise. It's right at the 2. Remember, 2.02 is a big number. We're coming up in this zone here. We can go back on the weekly and see where that's at. It's actually sitting right here on this wick over wick. Actually, this right before this one is actually where it's at. Look on our monthly. And you can see 2.02 has a monthly zone sitting right on top of it. So I'm very well aware of what's happening above my time frame that I'm focused on. So here's how I do. Most people in OTA will come in here and they'll go, okay, I found this zone. Now I'm going to drill down and I'm going to save as much money as possible by going to a lower time frame and tightening things up. I don't do that. My zone is my zone, but what I want to do is find out that this zone is on multiple time frames for multiple reasons. Number one main reason is if these zones, this one obviously is going to be a good one. If this is identified on other time frames, then it's not just a session trade. It's more than just one session. It could be multiple sessions, which is what I'm wanting. So what I do is I don't come down to here. I stay on my daily and I drop down to 4 hour and see if any zones hit our areas. I see this wick over wick will be a lower time frame. This one's good. This one's good. And this one's good. This one's still not valid to me. I see this on a lower time frame. I see this on a lower time frame. I can guarantee that's a zone on a 2 or a 1 hour. So I'm aware of this. This becomes even more aggressive. So on a 4 hour, I've got one confirmation here, and on this one, and on this one. Then I jump it up to 6 hour. Oop, let me do that again. 6 hour. And hope find something. Again, I'm seeing a wick over wick. I know on a lower time frame, it's going to be something there. Notice how I'm on a level. The identified zone is right here at the bottom. That's confirmed and confirmed. At this particular point, I can take either one of these two. At this particular point, I can take this one because I have 2 time frames that's confirmed on. I would much prefer the time frames to be 12 and 8 than 4 and 6. So I keep going. And I keep identifying this wick over wick still sticking out to me. I'm seeing something that I would want to do at this point as a possible aggressive trade if I want to keep this aggressive. This one's no longer valid. This one is. And now we have a nice fresh one up here on an 8 hour. So this is definitely a strong area of concern if I'm going long term with this. I'm still watching this one though. This area right here. I don't have it normal. a normal time frame there. So H12 and see what we got. It's going to be clean again. This is going to be a non-valid area. This one's validated, this one's still validated, and this one's still very strong. So this immediately takes me out of this zone, and there, I'm going to drop it down. And what I can do is I cannot trade this as a swing trade at this point, not the aggressive area, not the aggressive. This one and this one are still valid, but I like this area because it's low in the curve. It's low in the curve. So I could drop down, and we already know that on the 8-hour, we have this wick over wick. I could tighten this thing up and do a short-term type swing trade, a very, very short term. It's extremely aggressive, but I'm going to tighten it up this time. Whereas these I don't tighten up, this one I will if I really want to force the trade. And I'm going to go down to 2 hours first. There's our zone. We have our zone right there. And so if I really want to jump into this trade and be a little more aggressive, then I go to a regular understanding of, okay, 54 pips. I need to have at least 54 pips in here. And I have 56. That's pretty good. And if I really wanted to have a stop, I'd put it down here. My true zone would be, if I wanted to jump in, just like that. That would be my true zone. Now, the problem with that, this is no longer valid, so we're okay with this one. This has already been blasted through. So I need to make sure that on this, if this is the case, 90, I need to at least be able to get to 130, and I can currently. I can get to 130. So this is still a valid zone for me as a very aggressive. I don't always get that aggressive. Let's go down to the 1 hour if I really want to see what it looks like on a smaller time frame. Probably a level on a level. It's not. It's not a level on a level. And we could tighten it up just a tad more if we wanted to. We could bring it down, make it a little bit less aggressive, and that's how I'd do it. I'd come back to my daily, and I'd make this a very small set and forget, and these would be my swing. This could still work out. And with the further it goes away, the better off we are. Notice again where we came in initially with these fib numbers. Okay, that's about 16-minute lesson of basically what I do. If trade hits the target one, at 1.5 to 1, I can move my stop or I can leave it alone. Once it hits target 2, I have to move my stop to the target 1 location, period. So that's with SSI. Hopefully this helps you. I'm going to post this on YouTube for you. If you have any questions, just let me know.